Hi everyone, and welcome to this short introduction to Nokia's first quarter 2022 results. My name is David Mulholland, Head of Investor Relations, and today with me I have Pekka Lundmark, our President and CEO. In this video, we will be discussing Nokia's financial performance on a constant currency basis, where we discuss growth rates, and on a comparable basis where we refer to our margins. Full reconciliation tables can be found in our earnings release to our IFRS financials. With that, let's get started. Pekka, could you please summarize Nokia's Q1 performance?
Our Q1 was a great start to the year. We had 1% constant currency growth, 5% reported, despite some supply chain challenges. We would actually have been able to grow faster without those challenges. 250 basis points improvement in gross margin shows that our cost competitiveness has increased, our technology competitiveness has improved, and this we were able to do despite the cost inflation that of course the whole world is currently seeing. Our operating margin was flat at 10.9%. It shows strong underlying improvement in profitability that was offset by increased investment in R&D, slightly lower other operating income against the comparables last year, and then some timing impacts in our technologies business. Now looking at this year, we have a very strong order backlog and the demand environment continues strong. So overall, we are happy with the progress in Q1, and this is clearly a first step to delivering on our 2022 outlook.
So, Pekka, if we dig into the performance in a little more detail, what would you see as the key highlights from Mobile Networks?
Mobile Networks had a 4% decline on the top line, and this was because of supply chain constraints. We have a strong order book in Mobile Networks. It's looking really good, and we do expect to return to growth in 2022. On the profitability side, despite the weak top line, we had really great profitability improvement. We had strong gross margin expansion, and the operating margin expanded by 410 basis points to 7.5%. And then on the technology side, of course, the KPI we've been following is the share of our products that are powered by ReefShark, and that share was now 82% in the quarter. So we are clearly on track to achieve the 100% target of deliveries by the end of this year.
Network infrastructure continues to deliver really strong growth. Can you possibly comment on what's been the driver behind that?
Well, you're absolutely right. Network infrastructure had a fantastic growth from the top line perspective, up 9% year over year. And this was driven by fixed networks plus 29% and submarine networks plus 25%. The only weaker point was the optical networks, which was suffering from component availability. But other than that, fantastic top line quarter for NI. On the technology side, as you remember, we launched last year our next generation routing silicon, FP5, and it is right now going to the first customer trials, and it's looking really good. We initially targeted 4.8 terabits per second throughput, but now we are looking at even 6 terabits per second, which obviously further strengthens the value proposition to our customers.
So Cloud and Network Services delivered 5% net sales growth in the quarter and also good profitability improvements. Can you possibly talk about what drove the improvement?
This was indeed a good quarter for Cloud and Network Services. We've been doing a lot of product portfolio rebalancing. We have selected the areas into which we invest, which we believe will deliver growth for us. And now this quarter was actually an encouraging one. I believe that we are clearly on the right track. The growth was driven by core networks as operators are investing more and more into the 5G core network. But it was also then supported by private wireless deployments, both wide area networks and campus wireless networks. We had a really nice gross margin expansion of 520 basis points, which then together with the top line growth and other operational improvements strongly supported the operating profit improvement that we had.
One area of the business that did face some challenges and saw net sales decline in the quarter was technologies. Could you possibly comment what happened there?
This is primarily a timing issue. We are currently in litigation regarding 2 contract renewals, and once these negotiations are completed, we expect a strong recovery in net sales. In addition to this, there is one licensing agreement which will not be renewed because the customer has exited the market. But overall, we expect to be able to deliver a stable operating profit year over year.
Last question, Pekka. You've now got one quarter behind you. How do you see the outlook for the financial year 2022?
Well, Q1 was indeed a strong start to the year, both from a net sales and profitability point of view. The demand environment continues strong, and while there continue to be supply chain and inflation challenges, we are confident that we can deliver our 2022 outlook and also continue to make good progress towards our long-term targets. There are some short-term COVID-related challenges in China, as we all know, but we do not expect this to affect our full-year outlook. Our full-year net sales outlook is unchanged in constant currency. We have adjusted the figures to end Q1 exchange rates, so we are now expecting to have net sales between 22.9 and 24.1 billion euros. And then in the long term, we still look to grow revenues faster than the market and to achieve a comparable operating margin of at least 14% in the next 3 to 5 years.
Thank you, Pekka, and thank you everyone for joining us today. During this video, we have made forward-looking statements, and these statements are predictions that involve risks and uncertainties. Actual results may therefore differ materially from the results we currently expect. We have identified such risks in more detail in the Risk Factor section of our 2021 Annual Report on Form 20-F,